So, men, let me ask you with all this, is there a stock survivor kit for this stalled economy and tax hike threat? Don Luskin, how are you surviving?
Well, I think the way you survive is you learn the lesson of the last couple of years, which is over and over and over. When you're this scared, you buy the dip. Ever since Lehman Brothers failed, every government authority everywhere in the world said never again. Anytime, anybody, anywhere gets really in trouble, some central bank, some Congress, some parliament, some Treasury Secretary, somebody's going to bail them out. So what's the best thing you could have done in the last 3 months in markets? In debt markets, you should have bought Greek debt. In equity markets, you should have bought Greek banks. That's the formula. So we're getting a little correction in stocks. Buy them. Now, in a world like that, is the upside spectacular? No, of course not. But the dips can be spectacular. You have to have the courage to buy them.
All right, Jim LeCamp, buy the dips. Is that your survival kit?
Yeah, I do agree with Don, but I wouldn't buy the same things that he's buying. Look, the chimes of freedom are ringing in the emerging markets. Capitalism is running amok in the emerging markets. 13 to 15% GDP growth versus we're arguing about 1 or 2% GDP growth here in the United States. So you're going to want to be there. There's a lot of currency destruction going on around the world, so I still like gold, very bullish on gold. In terms of the U.S. market, yeah, I guess buy the dips. I wouldn't buy the U.S. too aggressively, though, and I wouldn't buy Greece. I would buy the strength, and the strength is in the emerging markets, Indonesia, Singapore, Malaysia. That's where your growth is.
All right, very interesting. Don Luskin, you heard the word gold from Jim LeCamp. Now, you have been a great gold bull. Are you still a big gold bull?
I am, and what I said earlier goes hand in hand with my gold bullishness. Someday, the price will be paid for all these bailouts, and we all know what it is. It's inflation. And that is why, of all the assets in the world, it's gold that's within 2.5%, 3% of all-time highs. Not the stock market, not the Chinese stock market, not anything else, gold. So that's the thing. You can buy the dips, you buy the rallies, you just buy it.
Just hang on to it. Jim LeCamp, can a case be made that relative to interest rates, stocks are very cheap? Profitable stocks are yielding about 8.5%. Corporate bonds, investment grade, are yielding, what, 5.5%. The Treasury is yielding 2.60. A bank account gets less than 1%. All right? Assuming that the country doesn't completely implode, are not stocks cheap relative to these other interest rate alternatives?
Well, stocks are cheap in many respects. Business spending has actually improved quite a bit. Capacity utilization has even improved a little bit. Architectural billings have improved. Shipping has improved. So there is economic activity going on. And with interest rates as low as they are, borrowing costs are so low for these corporations that, yes, stocks are cheap, especially if you want to pick up some dividend stocks that have nice yields. We like the pipelines, the MLPs, because you can get a decent rate of return, and actually the principal value of these things has started to move up. So, yeah, stocks are cheap, but look, we're looking at 1%, maybe less than 1% GDP growth here. So this is not really the country where I think you're going to want to focus your bets. So, yeah, stocks are cheap, but I still wouldn't be too heavy in the United States now.
Don Luskin, do we buy profits or do we buy GDP?
Well, a lot of people don't understand the connection between the two. People say, oh, well, we're going to have a 2 to 3% GDP years. That means that S&P 500 earnings can only grow at 3%. It's like some kind of speed limit. That's not true. After you've been through a deep profits recession, when the economy comes back just a little bit, companies experience a great deal of operating leverage as they recapture their economies of scale. That's why the U.S. economy, from its worst about 4 to 5 quarters ago, has only recovered about 3.5%. But S&P 500 earnings have recovered by something like 35 or 40%. And we are still in the sweet spot of that operating leverage curve.
All right, so Jim LeCamp, what about some money politics here? You're looking at a GOP sweep of the House, a big sweep of the House, and a very reasonable chance, in my humble opinion, of a Republican takeover in the Senate. Now, I know that's an uncertain forecast, but does that influence your investment strategy?
It does influence, and it interests me. The problem that I have here, and I do think this is going to happen. I think there's going to be a landslide in November, and the GOP is going to win. The market's going to like it very much. My problem here, Larry, is I haven't seen a lot of really good plans coming out of the Republican Party. I haven't seen big, massive capital gains cuts coming. I haven't seen corporate lowering of corporate income tax rates. I haven't seen incentives for new business creation. So I'd like to see something like we had in 1994, a contract with America where we knew what we were going to get. Right now, I haven't seen a lot of that out of the Republican
Party.
Party.
I am told, for what it's worth, that one is coming early September or so. But Don Luskin, Jim LeCamp makes an interesting point. He's essentially saying the GOP has no GDP growth. Now, that's an issue, is it not, Don? We can't be sure until we're sure.
Yeah, the GDP is GOP is playing it very safe now. They're running on a three-word platform, which is "we're not Democrats," and that's probably the smart thing to do if they just simply, cynically want to get elected. But they ought to be the party of ideas. Let's hear the ideas. Other than Paul Ryan, who has an idea? So let's step up. It's not enough, in my book, not to be a Democrat. You got to be a Republican who stands for something.
All right, lightning round. Jim LeCamp, single best investment on a Friday night.
Still like gold, it's our heaviest position, precious metals.
Don Luskin, are you going to say the exact same thing?
Oh, how about I'll mix it up a little bit? I'll say silver.
Okay, gentlemen. Thank you very much. Don Luskin and Jim LeCamp.